Joining us now is Urs Dur, principal at Zuoz Industrial. Urs, it's great to have you with us here. What are you seeing right now in the way of freight rates in terms of how much traffic is being diverted and how this might continue to be a disruption to transport?
Well, right now, some container companies are going through, some oil companies are going through if they need to, and some grain is going through if need be, and others are diverting. So it does seem to be a decision, but the heightened tensions in the area are definitely, in my view, an attempt to disrupt global trade in a greater way by a lot of different forces, and the Panama Canal is constricted as well. So if ships have to go around a lot, or if the Suez Canal is closed or the Red Sea is closed, you do have an upward pressure on ship fuel demand and prices, and therefore it'll help freight rates also because it constricts supply of ships going around, adding 10 plus days from Asia to Europe. So it is meaningful, but at this point in time, in terms of impact on oil price, it's been minimal.
Yeah, oil prices for sure, although I wonder how it's filtering into just the overall sort of cargo economy and how much those freight rates have been up, and perhaps maybe relevant to look back at, the supply chain disruption period around the pandemic to say just exactly how extreme they are now or not.
So that's interesting because during the supply chain issues that we had during the pandemic, container shipping, which is it's vital to go through the Red Sea to the Suez to Europe from Asia. Container shipping had constricted supply, and they also had logistics problems at either end of the ports. The logistics has been largely solved, and during the very high freight rates of 2020, 2021. A lot of ships were ordered. Those ships are now delivering. So there's going to be an oversupply of container ships coming up. That being said, if they have to go around, that constricts supply, freight rates will go up. There's also surcharges that certain lines are being permitted to pass on to customers. And we're not exactly sure how big those are. It depends, I would think, on the customer. And that's going to end up in the consumer in some way in terms of some price inflation. But so far, it's been manageable. Should it get worse, it's a real disruption.
Are most customers sort of in wait-and-see mode? I guess they're not necessarily making a call on how long the potential disruptions in the Red Sea are going to last.
If you need to get your cargo on a container ship in particular, if you need to get that cargo in a container, you have to pick which lines are actually operating the ship, not necessarily the route that the ship is. Often shipping lines share routes. And so if you know that, for instance, Costco, the Chinese container line, they are transiting and you know it's going to be on a Costco ship, you sort of know when it's going to arrive. Otherwise, if it's on Maersk or Hapag-Lloyd, you're not necessarily as sure. But this takes a little bit of time to pan out. In terms of oil, the Saudis have the Yanbu terminal in the Red Sea. It's not being affected. And the Middle East oil that is exported to the West already goes around the Cape. I mean, it is real. Yeah. But it's not damaging things dramatically yet. But it could get very, very serious. And I think the Iranians know exactly what they're doing.